Welcome back to the Commodity Compass, your fortnightly read on where global commodity markets are heading. I'm walking you through weeks 14 and 15 of 2026. Let's get into it. We'll cover the big picture first, then move category by category: food and beverage, metals and minerals, chemicals, precious metals, and energy. Stepping back, the story this fortnight is really about pressure on supply. Metals, chemicals, and energy indices all sit comfortably above 130. That's roughly a third higher than our 2024 baseline. Precious metals? Up at 246. Food and beverage, by contrast, has barely moved. That index is sitting near 101. So commodities are climbing, but it's a very uneven climb. Here's a snapshot of every commodity we track across the last 4 weeks. Take a moment with this one. The green and red arrows tell the story. Let's start with food. Palm oil bounced in week 14, then gave it all back the next week. Indonesia raised its export duty, but softer crude oil pulled it down again. Soybeans, similar story. A dip on weak U.S. demand, then a recovery as global stocks tightened. Maize kept falling, just comfortable supply and softer export interest. Sugar slipped too, global surplus, and India ruled out any export restrictions. Wheat caught a brief lift in week 14 as Chicago rebounded with crude, then USDA raised its supply forecast and the rally faded. Cocoa was the most volatile, a sharp rise on West African weather worries, followed by a sharp drop as Ivory Coast shipments came in stronger. Metals were the standout, almost everything moved higher. Copper climbed on tighter supply. Mine disruptions, force majeure declarations, and limited smelting capacity. Iron ore surged on stronger Chinese steel output. Aluminium jumped sharply after Iranian strikes damaged Gulf smelters, and the market started pricing in tighter exports from the region. Nickel slipped early, then recovered as Indonesian supply restraint kicked in. Tin gained ground. Sluggish mining in Myanmar and a crackdown on illegal exports out of Indonesia kept ore scarce. Zinc rose as well, helped by stronger Chinese factory activity and shrinking exchange inventories. Chemicals were largely shaped by one event: the closure of the Strait of Hormuz. Ammonia jumped as that closure took roughly a fifth of the world's seaborne supply offline. Benzene rose with Brent, then eased after the U.S.-Iran ceasefire. Caustic soda firmed steadily as a major Shandong refinery raised its purchase price. Ethylene spiked on freight and feedstock costs. Methanol kept climbing. Large shutdowns in Iran cut global availability and drew down port inventories. Propylene wavered, then lifted in week 15 as crude and feedstock costs rose. Soda ash barely moved. Oversupply and weak demand kept it locked in a tight range. Precious metals were where the safe haven flow really showed up. Gold pushed higher on U.S.-Iran tensions, rising inflation expectations, and stronger hedging demand. Platinum extended its rally. Persistent supply deficits, constrained mining, and spillover buying across the complex. And silver? Silver moved up on both legs. Geopolitical risk, physical tightness, and continued ETF inflows. Energy is where the geopolitical story really lands. Crude oil climbed in week 14 as Middle East tensions and the Hormuz closure tightened the market, then fell back in week 15 once the ceasefire raised hopes of resumed flows. Coal dropped, bearish sentiment, weak seasonal demand, and the reopening of Hormuz restored critical supply corridors. Natural gas declined too. Low heating demand, robust production, a bigger-than-expected storage injection, and forecasts for milder weather all weighed on price. And that's your fortnight in commodities. If you'd like the full data set or want to talk to our team about any of these moves in detail, reach out at sales@procurementresource.com or visit clate.com. Thanks for listening. We'll see you in 2 weeks.